at one point, investors, countries, we already understand where this is going. They're going to back away from this, and they're going to dump it. They're going. Anyone that is holding U.S. debt has got to be insane or deluded, or some other kind of thing here. I have no doubt that this entire system that has been mismanaged by a runaway Federal Reserve that has done nothing but cause distortions in this market that are hard to actually get your head around. They've pushed cash into assets where it shouldn't be going and away from assets where it should be going. And there's going to be a price to pay for this. When that is, who knows? Because I still believe they're going to pull things out of a hat, Elijah, that we have not even thought of yet. And part of this is this continuation of their quantitative easing program, how they're throwing this onto the backs of the banks. It's now their turn, in other words, to keep this going. And the Federal Reserve has made it clear by mandating that the banks need to hold these liquid assets. And what is their reasoning behind it? Just in case there's another event like 2008, so they will remain liquid. But I think it's a system that is destined to fail here.
So you're talking about that it seems like the QE really hasn't ended. They're basically pushing it onto the banks. So how does that have the same effect of increasing the money supply? I mean, because the banks can't just create money out of thin air in the same way that the Federal Reserve does. So is that going to still have a diluting impact on the value of the dollar?
Of course it will, because here's my take on this. Well, the Federal Reserve is requiring these banks to hold these assets. They're requiring this. So where are they going to get the cash to do it? They're going to have to borrow this cash from where? From the Federal Reserve. So the Federal Reserve is going to keep printing, and they can't stop this. These dollars are not units of wealth. These are units of debt. And it's a system that is dependent upon this mechanism, Elijah. It can never stop. This is why we do not have a balanced budget, why we'll continue to see epic spending, while we're going to see government spending even increase further for adding to GDP, and it's going to make everything seem like it's okay. But this is just government spending. It's not actual production down on Main Street. So again, all of this is a recipe for disaster, in my opinion. And I'll say this as well. I think being that the Federal Reserve has clearly maxed out their balance sheet, their balance sheet is higher than the GDP of many countries. That alone says a lot here. And what they're going to do now is force the banks. They're forcing the banks. They're telling the banks that they need to hold these liquid assets. If the banks don't have the capital to acquire these, what are they going to do? They're going to start shutting down more banks? Of course not. They're going to fund these banks with cash that's printed out of thin air. Very dangerous.
Did you want to talk a little bit about your view on where you see the stock market heading? Because I know you wrote on your blog recently that you see that the stock market could take a hit soon.
Sure. I've been saying for a long time that this month looked like Shocktober. I did videos about it. I did a whole bunch of things about it. It did play out earlier in the month. We had, I think, the first near 10% decline in years since the QE program. But what's happening now is kind of odd the way the market is reacting to what's going on today. The market is up pretty high. Most of this is because of Visa. Visa reported earnings, and the street liked it, so it's up pretty high. So it's pulling the Dow up with it. But I still think we're at a point where we could see a reasonable correction in this market, and it needs it. There's no doubt about it. We came off of we made a V-shaped recovery off of that bottom. I told everyone that was a bottom. As a matter of fact, I went long a couple of equities. I told people to do it, and one of them did phenomenal. That was Microsoft. I'm a little leery about what's going on. I'm kind of betting against the market right now. Could I be wrong? Absolutely, I could be wrong. As a trader, you take your lumps and you take your wins with you as well too. But I still think we have a possibility of seeing something here play out over the next week or two. Maybe the elections will have something to do with it, and it could put some pressure on this market. And then what will happen at that point? We'll see a little bit of a bounce here with regard to gold and silver, because it's the mechanism here. When you have an environment where it's a risk on, people want to be in equities. When it's risk off, they want to be in quote unquote safe havens, which is debt, which is not a safe haven. Maybe right now it is for some, and hard assets.
So you're saying in the short term, the stock market may go down. Do you see that? It seems like we've been seeing a bull market in the stock market since the Dow was at like 10,000 back in 2011.
Actually, since before that, since the Fed jumped in with their QE1 and that was at 6,000, they had to jump in and save the market. You know what's interesting, Elijah, and people don't understand? The job of all of these markets, whether it's the equity markets, whether it's a currency market, whether it's the debt market, you pick a market. They have one job and one job only, and that is to determine fair market value. That's it. They have no other purpose and no other job. So when you have a Federal Reserve, I mean, this is not speculation. This is what has been happening. The Federal Reserve has been artificially suppressing interest rates. This has caused, again, capital misallocations across the spectrum and distortions across the spectrum. If the Federal Reserve would allow debt to be priced at fair market value, it would be nowhere where it is right now. And that would put an enormous amount of pressure on equities. It would not allow the speculation that we're seeing. So again, this will correct to fair market value at one time: gold, silver, currency, everything. And it's going to be super ugly.
Definitely. And I was wondering if we could talk a little bit about the debt market and the bond market. The Federal Reserve said that they might actually raise interest rates in 2015. Do you see that happening? And I mean, what impact would that have on the bond market? And I guess the rest of the markets, if you wanted to talk a little bit about that.
I do not believe the Federal Reserve is going to raise interest rates next year. They cannot do it. They cannot do it. They can't even service the interest on the debt, which is going to be even hyperinflated further. I don't know what else they're going to pull out of a hat here, Elijah, down the line. I just know this. They have to be extremely desperate to be putting in place the things that they are, the mechanisms that they're putting in place, this fake taper, which led to this fake ending of QE, which is just being continued by the banks. And the Federal Reserve is going to fund that all by printing cash out of thin air. So nothing has changed. And again, it's just a matter of time, in my opinion, before this all corrects to fair market value.
All right. And before we let you go, I know we've discussed this a lot before, but for our new viewers, did you want to lay out where you see this all heading? You've talked a little bit about this, and how people can protect themselves.
Well, I mean, I think with regard to protecting yourself, we could listen to Alan Greenspan. You don't have to listen to Greg Mannarino, and that would be to get yourself in hard assets. Embrace these prices right now. What's going on here with the metal market? It's insane. We have silver that is below production value cost. I'm sorry, below production cost, and it's a gift. So just keep betting against the debt, and you bet against the debt by holding hard assets. I don't care where the equity market goes. That's the best trade on earth.
Any last thoughts before we let you go?
Well, not really. I mean, other than people need to start paying attention and understand the mechanism here, and this will not stop. It's a relentless mechanism that is designed to borrow debt into the system, and they're going to do this through mechanisms of war, allowing the spread of diseases and other things, Elijah, that we can't even imagine just yet.
People can find you at traderschoice.net. And once again, Greg, thank you so much for your time today.
Thank you.